Let's kick this off. Welcome to This Explainer. For a lot of people, looking at global financial markets, Forex, crypto, stocks, it just looks like pure unadulterated chaos, right? But what if it isn't? The source material we're digging into today shows us that navigating these markets is actually a lot like mastering a really complex strategy video game. Think about it. You wouldn't just run headfirst into a boss fight completely blind. No way. You need a solid strategy, the right gear, and a real understanding of the game's mechanics. So today, we are breaking down the strategic architect's blueprint for high-velocity trading. We're going to take all that overwhelming market noise and transform it into a highly structured, totally actionable game plan. Think of this as our level select screen. First up, we have the trading master plan. Then, mastering demo mode. After that, speed equals money, followed by your trading toolkit. And finally, scaling to real markets. We're going level by level. Let's dive in.
All right, let's jump right into phase one, the trading master plan.
Okay, so how do we avoid being part of that 95% of people who just crash and burn because they jump in without any clarity? Simple. The blueprint gives us this 4-step tutorial. Step 1, learn the map. In trading, your map is the charts. Step 2, learn the rules. This is your risk management, literally the mechanics that keep your account alive in the game. Step 3 is master the tools, meaning your technical indicators. And then finally, step 4, attack. That's when you actually place your trades. Breaking this whole crazy ecosystem down into these 4 logical steps just completely strips away the overwhelm. It makes the whole shebang totally approachable, even if you're an absolute beginner.
Now, learning that map requires a very specific technique called top-down analysis. Look, you don't just pull up a zoomed-in, frantic 1-minute chart and start guessing. You start by zooming all the way out to the weekly chart to get a feel for the big picture. Then you step down to the daily chart. Is the overall trend bullish or bearish? From there, you drop to the 4-hour chart to find the real structure like order blocks or liquidity pools. And then finally, you zoom right into the 15-minute chart to pinpoint your exact entry for the attack. So it's big picture first, surgical strike second.
Moving right along to phase 2, mastering demo mode. Now, while you're practicing in demo mode, we really need to bust some crucial jargon right out of the gate. First up is lot size. Think of lot size as the volume knob on your risk. It's the specific quantity of an asset you're trading. When the market moves, your lot size dictates exactly how much money you win or lose per price movement. If you punch in a 0.2 lot size, your broker handles all the complicated math behind the scenes, but you absolutely have to know that managing this specific input is exactly how you keep your virtual and eventually your real account safe. Listen, if you take nothing else away from this explainer, remember this number, 1 to 2%. This is absolutely the golden rule of risk management. You never ever risk more than 1 to 2% of your entire account balance on a single trade, period. Your goal here is always a 1 to 2 risk to reward ratio, meaning if you're risking $5, your target is to make $10. If you follow this math, it's wild, but you can actually lose more trades than you win and still be consistently profitable. So, how do you actually enforce that strict 1 to 2% rule? Well, you use a stop loss. Think of a stop loss as your automatic financial shield. It's an order that just instantly closes your trade if the market moves against you to a certain price. It completely takes the emotion out of taking a hit. You set it, usually tucking it safely underneath an order block or a fair value gap, and then you just let the system do its job and protect you. Now, I just mentioned a fair value gap or an FVG. Identifying these is a massive part of reading your map. Basically, an FVG is a price imbalance. It's created when the market moves so incredibly fast that it literally leaves a gap in the chart's natural flow. And here's the secret. The market loves to return to these gaps to fill them back in. That makes them incredible target areas for future price action. So here's a little homework for you. Open up a chart sometime this week and see if you can spot 5 live FVG examples. I promise it'll completely change the way you look at the market. Real quick, before we move on, let's contrast the 2 modes we're talking about. Demo trading is all about playing for free, learning the tricks, and testing out your strategies without any fear of losing rent money. Real trading, on the other hand, is playing for real money, but you only start that, starting small or using prop firm challenges, after you've proven yourself with consistent success in demo. It's all about progressive disclosure. Demo is the training ground, but real trading, that's the actual battlefield.
All right, shifting gears to phase 3, speed equals money.
The source material shares this incredibly punchy mantra. If I see it first, I make the money first. And it's so true. In real-time trading, relying on yesterday's news puts you dead last in line. The true strategic architect uses AI tools, real-time alerts, and instant notifications. Getting that critical information before the massive retail traders do, that is exactly what gives you the edge. To do that, our sources mapped out a highly curated list of Telegram channels that basically acts as your personal real-time intelligence network. You've got Phonos Call for early project alerts and airdrops. There's WhaleWire for tracking massive big player moves. Binance announcements is absolutely crucial because an instant listing notification almost always equals a massive market pump. And meme coin alerts is there to help you catch the fastest moving assets on the market. These channels give you that instant alpha you need to jump into setups before the crowd even realizes what's happening. Okay, so to actually execute on that alpha in the crypto space, you need some precise action items. First, you need to know how to buy meme coins on the Solana network, which means setting up a phantom wallet and loading it with a small starting balance, say $100. You should be watching Binance tutorials and joining airdrop platforms like Taito. And here is a really interesting tactic. You need to track social media statements from major public figures, people like Trump, Elon Musk, or Kanye. Completely putting personal opinions aside, the source material is very clear on this fact. Posts and tweets from these specific individuals constantly serve as immediate catalysts for sudden, massive market movements. Moving on to Phase 4, your trading toolkit. Let's look at the gear you need. You might think you need a crazy 6-monitor setup, but the required software stack is actually remarkably simple. TradingView is your war room. That's where you do all your charting, your top-down analysis, and your indicator checks. But actually, you don't trade there. You pull the trigger in MetaTrader 4 or 5. You connect your MetaTrader to established brokers like FBS, Exness, or OctaFX. You track all your win-loss data meticulously using MyFXBook, and you check Forex Factory every single morning to see if any major economic news is about to drop. And that's it. That is the complete software stack. To help you navigate, here is a quick cheat sheet of the most critical assets. You have gold, ticker XAUUSD, which is famously volatile and an absolute favorite for news junkies. You've got major tech indices like the NAS 100, heavy-hitting currency pairs like EURUSD and USDJPY, and of course, Bitcoin, BTCUSD. If you're looking for high velocity, gold and the NASDAQ are generally where you're going to find the heaviest action. But here's the catch. When you trade these assets is just as important as what you trade. Enter the market clock. The global market is divided into distinct sessions: Asian, London, and New York. The absolute most crucial time is the overlap. That's when London and New York are open at the exact same time. This window is the most volatile and therefore the most potentially profitable time to be trading. Conversely, unless you are specifically trading the Japanese yen or maybe the Aussie dollar, the Asian session is generally a lot slower. And honestly, it's often best avoided if you're running high-velocity strategies. And finally, we arrive at Phase 5, scaling to real markets. Look, consistency is the only thing that turns a beginner into a strategic architect. So check out this actionable weekly routine. Monday through Friday, you are in the trenches, learning strategies daily and constantly checking your Telegram news updates to inform your trade decisions. But you know what? The real magic actually happens on the weekend. Every single week, you should be backtesting at least one strategy to see if the math actually holds up over time. And every Sunday, you meticulously journal your past week, what worked, what totally failed, and you prep your charts for Monday morning. When you finally go live, you need to follow this precise scaling progression. You do not, I repeat, do not deposit your life savings. You start with a small, real account, maybe $100 to $300. As you prove your edge and build consistency, you slowly scale that to $500, then $1,000, then $2,000. Alternatively, the blueprint points out that after a couple of months of solid, consistent results, you can actually take a challenge with a prop firm like FTMO. This is a total game changer because it allows you to leverage much larger amounts of institutional capital and you keep a split of the profits, all while strictly managing your risk. Throughout this entire scaling journey, you have to completely internalize this one core piece of mindset advice. Losses aren't failures. They are just lessons. Seriously, taking small, mathematically managed hits is literally just part of the game. If you stick to that strict 1% to 2% risk limit we talked about earlier, a loss is nothing more than a tiny data point in your Sunday journal. It's valuable feedback. It is not defeat.
Wow, okay, we have covered a tremendous amount of ground today in this explainer. From mapping top-down analysis to leveraging high-velocity Telegram tools, you now possess exactly what 95% of people jumping blindly into these markets do not: absolute clarity and a structured blueprint.
The only missing variable right now is your execution. So I'm going to leave you with this one provocative question. What is your next move? Challenge yourself right now. Go set up your 30-day demo tracker and start mastering the game. Thanks so much for joining me, and I will catch you in the next one.